first time since the financial crisis, all 34 of the biggest U.S. banks have passed the Federal Reserve's annual stress test, and investors could be reaping the rewards. Let's get details from Adam Shapiro.
Good morning, Cheryl. Good morning, Lauren. The headline this morning has to do with the fact that the big banks are announcing huge dividend increases as well as share buyback programs. In fact, a senior Federal Reserve official said that this year they intend to send back to shareholders something like 100% net revenue. Last year it was 65%, the banks as an aggregate. So it shows that the banks in the eyes of the Federal Reserve are quite healthy. Now, there were two banks that, lack of a better term, perhaps had hiccups. For instance, American Express, they adjusted their results, and you're allowed to do that before the test, and they came in just fine. Capital One will be allowed to pay a dividend. They were not objected to, but they're going to have to address some issues, according to the Fed, in order to continue paying a dividend. And here's what the Fed said about Capital One. Quote, "The Federal Reserve did not object to the capital plan of Capital One Financial Corporation, but is requiring the firm to submit a new capital plan within 6 months that addresses identified weaknesses in its capital planning process." As for Capital One, they still scored well in their Common Equity Tier 1 capital ratio at 5.9%. That's above the 4.5% minimum. This is the first time since they began stress testing the banks that there were no objections whatsoever. Back to you.
And financials leading the market 2 days in a row. Adam Shapiro, thank you.